Everything you see here is strictly informational. Forex is a high-risk business. Please do not place trades with more money than what you don't have. Please do not trade other people's money. Do not borrow any money than what you cannot trade with. And please take everything that I say as a personal opinion. I am not considered a financial advisor. I'm not considered a broker. I am just one here simply recording my journey along learning the markets. Hey, what's up everybody? Here again with another thing of bodies and wicks. I'm gonna, whoa. Okay, alright, anyway. I did a couple videos already this week today regarding the S&P, regarding my double RSI strategy and how it's helping me a lot with crypto. I've also done a couple things, you know, who knows, I just been doing some videos here and there. But today I want to talk about gold. Not necessarily about silver. I just haven't been paying attention to silver, so it would be a disservice to anybody who watches my videos to sit here and listen to me talk about silver as if I know what I'm talking about. I wish I paid more attention to silver. I really wish I did. It seems like it could be a great way to make money. Maybe I'll take a quick peek look at it and see what's going on, but I do want to talk about gold just because I have been following gold step every single step of the way, every single, you know, ever since it, you know, was making its huge moves before it you know, it blew up to its new high. So if you don't know who I am, my name is Ted. I do this thing called Bodies and Wicks, which is basically just kind of like my journal of the market, and I go through different you know, things that you can trade in the market, whether it be forex, whether it be crypto, whether it be, you know, gold, whether it be indices. I'm an MT4 trader. I trade through MetaTrader 4. If you're on Robinhood, that's great. Use that for investing. Use it for options trading if you want, but don't try to buy and short sell equities. That's probably to be honest, that's the dumbest thing you can do. And you know, I take that from any kind of person that knows how to trade. You know, it doesn't make any sense to put $60 into a stock and wait for it to go up about $2 and then sell it, and then what, you made $2 whenever you could use MT4 and then put in a 10-cent trade, and then it'll go up $2, you make $2 and you sell, and you didn't have to put nearly as much money in. You don't have to have a huge account to do it. So if you're wanting to learn how to trade, find a good trading platform. My suggestion would be MT4. I think that's the one most people use, but maybe I'll do a video on how to use MT4 if you don't know how to, because I know we get a lot of questions about the difference between trading and investing, and there's quite a bit of a difference. You know, investing just means that you're putting money into equities, and you know, it's kind of like putting it to a bank account hoping that it's going to grow. Trading is more like you know, placing a bet through a broker, and you know, you can sell without having to own anything. If it gets to a high point and you think it's going to go lower, you can sell and make money that way. If it's at a low point and you think it's going to buy, you can buy, and you know, that kind of thing. Hopefully most of you already know that that's watching this video, but anyway, I'm going to go ahead and jump into gold in just a second after I tell you to do this one thing called subscribe. If you like what I do and you want to hear more videos from me, there's a subscribe button. Get you know, put the alerts thing down, do all whatever it is that you're supposed to do with YouTube. You know, that we can get more information from me. Again, I'm not the greatest at the market, but I do feel like I put a some kind of perspective that maybe some people wouldn't see, and so I like listening to a lot of different people's perspectives on how the market is going, and I like to put my own, advice into it as well. Again, I'm not a broker or financial advisor. I'm just a trader. That's all I am. I'm just a trader. So hopefully, my trading experience can help you out in the long run as well. So what we're going to do now is that we are going to go ahead and take a look at the gold market. Now, as you can see, what I'm doing is I am looking at a daily market. Excuse me. And what I have drawn here is I have drawn, and this has been going on for quite some time. I have drawn a trend line that happened back in June 5th, whenever we stopped going sideways and we started, having this uptick. Before that, we were going sideways for quite some time, and that trend line has been kind of holding true for quite some time. As well as Fibonacci, so if you were to draw a Fibonacci from that same exact point to where I started the trend line as the bottom of the Fibonacci and drew it up toward the top, whenever gold made that massive drop, not only did it hit the trend line, but it also hit the 50% of the Fibonacci. So whenever I talk about trend lines, I usually don't believe in them solely. I don't believe in trading off them solely. I believe they coincide almost 100% with Fibonacci levels. And that's just kind of my belief. That's why I really don't trade trend lines. They're just really not something I trade off of. I look more at support resistance levels, as well as smart money tactics as well. And we'll see if we can't get into some of those anyway going into gold. So what happened with gold, especially this past week, is that, whenever I started my video off last week, is that we finally jumped across an important level, right? Which was that 35. Hello, I just became Joe Biden, and I was thinking of the S&P. Anyway, we jumped across this 1953 level, I want to say is what it is. 1953 level. That has been an important level as far as resistance and support has been concerned, especially since that big drop. It seemed like that we had a very, 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 very tough time trying to get across this level, and then when we did get across the level, we would somehow get pushed back. Now, what I'm also going to do right now is add some Fibonacci levels in here, the 382, 236, because those also come into play, because that's exactly where we're at. We're in between kind of those two levels, those fib levels. So it hit the 50, jumped above the 50, and we're just playing around this 382. Once we got above the 236, that acted as a support for a very short amount of time before it fell back through. And then now this 382 is still continuing to act as support. Last week was this candle right here on the daily. So if I draw a vertical line here, you can see this was the candle that led us into the end of the weekend, and this was the candle right here that started the week off. So what happened in the last week was that we grew a little bit, and I honestly thought we were going to be playing in this area right here. I'll draw a little box, and I thought we'd probably be doing this throughout the entire week until we hit this trend line. And then once I thought we'd probably hit the trend line, then we'd probably see some movement upwards. Instead, we did get above this level, and it seems like we got to this 236 level and we got rejected. And then once we got rejected, we tried to stay above, and then we got pushed down below, back underneath this 1953 level that we so dreadfully have been trying to get across for quite some time. 1954, I guess you could say, somewhere around there. So we got below that. Not only did we get below that, we got even lower. So I was thinking once it got below that, we'd probably go off the trend line. Instead, we didn't. And now what I did notice is that if we do draw a trend line from the very top of the very high to this one little push up that we had, we draw that all the way through. And right now we are kind of bouncing off of that trend line going the opposite way. So now we're not using the upward trend line, we're using the downward trend line. And it looks like the market has just started, as it is 5 o'clock. So 5 o'clock Eastern time, not Eastern time, Central time, would mean that gold is now open. So we're catching it as gold has opened. So now that we've looked at the daily chart, let's go ahead and look at the 4-hour chart. Let's do a little bit of an auto here. So excuse all the lines. I like to use a lot of lines to know where my support and resistance levels are, to know where I'm at in the market. Because if you don't know where I'm at in the market, you are lost. This big drop was something I think a lot of us didn't expect. Me and myself personally, especially after seeing this candle come up here. We had a huge rejection. We've had 2 huge rejections, and even though it was a little bit of a red candle, to me, I saw this as a sign of reversal. We were coming down. We were getting rejected off of this, and I honestly thought we were going to go this way. Luckily, I didn't place any trades, but it just kind of fell through the bottom of the water. And with it getting below this 200 MA, and both the 50 and the 200 MA are kind of almost in the same range, I found that to be a little bit discouraging as far as where the metals are concerned. But one thing that we did have, and that is still a bullish move, is that we didn't have a 4-hour close or a daily close below 1920. So if we know what 1920 is, that is the high point from 2011. The way I see this, and if I actually want to go and kind of take a look at this from a daily perspective, and a very, very long term. And actually, let me get rid of this Fibonacci really quick just so I can kind of give you my thoughts on this. Let's see if we can't get 2011 in here. I am in an area to where I don't get very, very great I guess you could say internet reception. I'm house sitting over the weekend. Let me do this on a weekly basis instead. I wish there was a way I could do like a 3-day, like I have a 3-minute or a 3-hour or something like that. Wish I could do like a 3-day something, but give a second for it to load. But as you can see, we have, I'm going to draw a line right through here just because I do like seeing this. We saw this was a support and or resistance here, broke above it, became support, made a new high. We came back down, we hit the support, and then now we are drawing and we are going above and beyond this 1920 level that we had back in 2011. And the thing is that we have not got below that. We did get below it in a sense for just a very, very short amount of time. Let me draw a horizontal ray here at the very top of this, just so we can give an idea of where that is. Yep, 1920.80. So we did get below that for just a very, very short amount of time this week. But as soon as we did, it got rejected and it got pushed back up. So what this is telling me is that this is a new area. This is where we're going to be playing above, just like we did back here. Go back to it. As you can see, back in 2008, we came up, gold hit a certain point, came back down, and then we got above it. We came down. We're touching that support, and that's what I feel like was happening right now. So whenever you see something like this, we got a new high from that 2008. And then it eventually got down, it hit the low, hit that resistance level from that old high that we had. That's what I feel like is kind of happening right now. The schematic may not be playing out the exact same way. It kind of feels like it is, to be honest. Because as you can see, it did drop. It looks like it's kind of doing some head and shoulders things throughout here. But then eventually, it did continue to move on upwards before we did make a new high. We made a new high, and then we decided to come back down, hit that same support, and then we decided to continue to move on. And then now we are back above that 1911. So now what I'm seeing is what I'm thinking is that we're going to kind of see the same thing. We're going to see, I'm very, very bullish on gold anyway. I think that this is going to be that kind of schematic that we saw to where, we come up, we hit that resistance. The only thing is that we didn't really have a pullback on that resistance like we did back in 2008 before we pushed on forward. So we might see a pullback below that 1920 level. But my thoughts is that, hey, we kind of jumped across it. We did have a retest of it for sure, and that's what this is here. This dropping below here did have a retest of it, and we stayed above it, and it just looks like we're going to continue to stay above it, even on the weekly level. The weekly close that we had last week was 1932. So still, we're pretty much above that 1920 level. So this to me still signals bullish movement. And whether we're going to see sideways action this week or whatever we're going to see, I would not bet that we're going to see any type of close, whether it be a 4-hour close. We could, 15 minutes, 20 meter, 30-minute closes, things like that. Yeah, we might be able to see it below 1920. But I don't see it getting any worse than that. Even on the weekly chart, I mean the 50 is way down here. Usually, it was the last time we hit the 50 back in March, or during COVID. So gold is usually trending well above the 50, has been for quite some time. And so that's why I think we're not going to see much of a pullback. If anything, I think this 1920 level is serving as a very, very good surface as support. If we want to get down into the nit grit of things, let's go ahead and get down to the 1 hour. And let's do an auto here. Don't know exactly what this green box is that I have. And why this is here. I don't think I have this here before. Yeah, not really for sure what this green box is. I feel like that maybe I only have it on the 1 hour time frame. I don't know. But what we did see throughout, especially these past couple weeks, been seeing a lot of the same patterns, and it's been kind of these head and shoulders type patterns, right? You'll get like a left shoulder, you'll get a head, you'll get a right shoulder, you'll get a small sell off, right? And then it'll happen again. You'll kind of come up to a head, you already have a left shoulder, kind of comes up, almost a right shoulder, you'll have a sell off. And then right now it's kind of making its way on the bottom of this trend line that came through here, and I have a feeling that the trend line is perfectly fine. It's just getting above this trend line here is what we're going to be looking for. Also trying to get back above that 1954 area. So again, we could see another entire week to where we just kind of play games in this area right through here throughout the entire week. Look for support and resistance as if you're going to be trading this. Look for your support and resistance levels as you continue to trade. Don't try to also watch your moving averages. Your moving averages definitely give you a lot of good information as to where your trading might be happening. They do like to reject off the 50, and once they reject off the 50, they'll go to the 200. They'll reject off the 200, and they'll go to the 50. They'll reject off the 50, and usually at that point they'll surpass the 200. That's just kind of like a slingshot shot effect, and I think that's what may be happening right now. So if we take a closer look to see what is going on, it's been following kind of this 10. It hits the 50. It does. I really don't know what happened here. Comes up, hits the 50. It crosses over the 50, right? So you can see it crosses over the 50, so that was a sign to buy. You can definitely tell people bought quickly until it hit the 200. As soon as it hit the 200, it rejected, and then it went downward, right? And then it got to about that 1920 level. Once it hit that 1920 level, everybody said, nope, this is not gonna be a level. It's gonna get below. So I don't even think we had even 1 hour closes or less than that 1920 level. So let me just redo this coordinate here, and let's just hit 1920, and let's see if there was any closes. No, there was not even 1 hour closes that got below the 1920 level. So as you can see, this is a very, very important level. Whether it be the daily level, the weekly level, the 1 hour level, the 4 hour level. I would say once you get near the 120 level, you are in a good position to go ahead and buy. Let me see. I thought the lowest that we ever got was 1916. Again, just continue to watch these levels. As you can see right now, it looks like it bounced off the 10, and this is in the very first hour of trading. It has already went down, bounced off the 10, and is continuing to go upward. It looks like it's already bounced off the 50, and so it's trying to figure out where it wants to go. My guess is that if we look a little bit closer on the 15-minute, it is kind of in between the same thing, in between the 15 and the 200. So it doesn't know where it wants to go, and let's see what's going to happen with the 5. So generally looking at these is where you'll kind of see what's going to happen. All right, so now at the 5, right now, both the 5, the 50, and the 200 are below price action. So I would expect this to come down and probably test. As you can see, there's also a support level that is happening right now, right there, to where it couldn't get across. It looks like it broke across already. Was it on the 6th? Yeah. So it looks like it broke across already within the last couple minutes. Got up to that that trend line that's been happening for months. Rejected off the trend line, coming back down, and it looks like it's probably going to hit either one of the 50 or the 200 MA on the 5-minute, and then I would expect it to move upwards. So right now is a good spot to buy. In my personal opinion, I might place in a buy very, very soon. But I just kind of waited out just a couple more minutes to see what's going to happen. Because it's also reacting off of that support line area right there. So I hope we don't have to play in this area for too long, and I hope it gets above this dreaded 1950. Let me see here. Let's go back a little bit further. Yeah, let's see here. Let's see what last week was, the very beginning of last week. So the very beginning of last week, we had started way above here, and I had thought we were going to end up staying up in this area for quite some time. Unfortunately, it looks like somehow we didn't get above this high right here, which I think maybe lost some confidence in some people. Also, the strength of the dollar started coming in toward the end of the week. So when the strength of the dollar started coming in, it started causing gold to sell off a little bit. But it's strange because the dollar really had no correlation as far as gold was concerned up until recently. Gold would just kind of be all over the place. It didn't matter what the strength of the dollar was. Strength of the dollar was high, the gold was high. Strength of the dollar was low, gold was still high. But now we're kind of seeing a relationship happen between gold and United States dollar. So I would say watch out for that too to see if that's going to have any impact. Always do an analysis of the dollar every day. If you don't know how to do analysis of the dollar, it is called the DXY. I have that right here. The one thing that hello, now I just did that and I can't get it to get this off my screen. This is one thing bad about MacBook. Sometimes when you want to zoom in, oh, there we go. Now I got it to zoom back out. Looks like we have Ethereum crossing. So what does that mean? Looks like Ethereum is bouncing off of the 200 MA. As it just got above it. So I'm going to wait for it a little bit, and I'm just going to go ahead and throw in a buy. The only thing about Ethereum is that you do have some kind of huge what's the word I'm looking for? Spread. You do have quite a bit of a spread on Ethereum, which is very, very unfortunate. But it acts just like anything else would, as far as like Forex is concerned. So I would expect it not to get below this this 50. So let's put the stop loss at 350. And let's see what happens. Anyway, sorry to jump into that. DXY, the one thing that the thing about the DXY that is kind of bothering me is I do know that we have, we've had our periods of strength and weaknesses throughout the dollar, but we have not seen a daily close of this right here, this 93.34. This has been the last time that we have seen some kind of strength, I think, or actual real strength in the dollar, is having this 93.84. Now these two white lines right here, what these represent are two trend lines that go back multi-year. We're kind of stuck in the middle of them. And so we're trying to see if we're actually going to break out of one of them now. The good thing is that we did bounce off of the lowest one, and we did continue to move forward. However, we weren't able to get up and across that 93.34, right? We need to get above that 93.34, and we need to get a dollar close above the 93.34 for the dollar to start really seeing some actual strength back then to it. Otherwise, Euro USD, GBP USD, NZD USD, USD JPY, all of these are going to kind of continue to kind of falter as far as moving back and forth in between this 20 and 30 pip range. and it's going to be, just scalping and scalping and scalping. It's really hard to get an idea of how you're going to play this long term, if you can't, if you can't really get a good sense as to where the strength of the dollar is going. And I think the same is being said for gold. We can't really get a sense as to where it is going because there's so much of a correlation between gold and the dollar right now that we can't seem to get a sense as to where gold is going to be going. But what I am looking for in gold, I don't expect it to get below this 1920. If it gets near this 1920, that's where I'm definitely going to be pulling the trigger for a buy. Watching this 1953-54 level as a resistance. Hopefully maybe it'll have a bounce back, and then hopefully it can push through, depending on what the moving averages are around there. Like here, the moving averages are right about on par with price action is right now. But if this were to start moving up, and we kind of, who knows, maybe we hit that 1954 around the same exact time that we hit this trend line, right? And by the time it pulls back, these MAs are starting to come up this way as well. And so what I mean by that is, or how I can draw that out, is the MAs start doing this, right? You'll see the 50 or the 200 MA both start doing this. 50 MA will kind of go along with the price, what it's supposed to be doing. And then the price will probably end up doing something like this. And I think maybe we'll probably see it hit right here. And then we'll probably, after that, see a rejection. And then back down to this 200 MA. And then maybe another rejection back down to the 50 MA. And then maybe another rejection off the 200 MA to the 50 MA. And then after that is when we finally see it move forward. Generally, that's what we kind of see things play out. But this is all really going to be in correlation with a dollar, unfortunately. Gold miners are still doing fairly well. I say one indication if you want to look at a gold miner to see how they do, because they're not very well known, but when they do produce, they produce very well. And it's called GPL, Great Panther Silver, Great Panther Mining. They're kind of a good indicator on how the metals are being done. Right. So if we take a look at GPL, and this is equities, right? This is not forex. This is stocks. But if we want to look and see what kind of demand that we have for gold, the best way to look at it is going to be in stocks, right? So if we throw a 4 hours on there and we take a look at GPL, GPL at one point, this is a very, very low stock price. The highest point I think it ever got was almost near $2. Actually, it was actually higher than that, and that was back in 2015. It got up to, did get over $2. I do know that, because I actually invested in it in early April, May or something like that, February of 2016. It was only like 43 cents, and then it jumped up to like $2, and I was like, whoa. Cashed out. I cashed out at the right time. So here it is, April 2016. That's where it definitely hit its high. It was over $2. Happened again. But right now, what we're seeing in GPL, it did take a little bit of a dive, but now that gold is coming back into play, you're seeing it kind of jump up. If anything, if you're me, I'm definitely bullish in gold. I know we've had these kind of pullbacks in gold. I expect gold to continue to go up, and I'm going to continue probably to put more and more money in companies like GPL. because they're doing a very good job at producing things like silver and gold and other kinds of minerals, things that make your watch run, things that make your computer run, anything that's in kind of every kind of technology requires some kind of mineral. So to get to the base of it, instead of investing in Apple uses all these different minerals to make sure their products run. Sometimes the best thing is to invest in those kind of things, because that Apple's going to be purchasing from them to make those materials. So just a little tidbit out there for people that aren't huge savvy investors. Sometimes the best way to make money is to find the root of everything and not just a company. Find out where these products are coming from and how they're being made, and that way you can continue being a good investor and learning how to position yourself at the right time. Anyways, that was kind of a lot to go through, but that's just kind of my thing on gold right now. Again, 1920 looked at that being a low point. I wouldn't expect it to get any lower. Hopefully we're going to break this above this 1954. After the 1954, then we start looking at those fib lines that I was talking to you about. And it doesn't look like I have them here for some reason. Oh yeah, that's right, because I deleted the fib. So let me go back to the 4 hour, and we'll kind of show you what I was talking about as far as the fib is concerned and what levels to watch, because those have definitely played a tremendous role, or at least a good role into understanding where price action is being held. And Fibonacci is not lying in this one at all, for 1 second. So let me wait for magnet mode to come off. If we throw the fib down here, and well, it's not letting me go there just yet, so let me pull this up a little bit more. And if we go to the very top of the food chain here, as you can see, again, the 50 is where that big drop happened and it stopped. And again, we are playing above this 382 level, and we have been playing above this 382 level, in between the 382 and the 236. Once it gets above the 236, it acts as support for just a small amount of time before it falls back through. But the level in between the 382 and the 286, which is the actual price of 1920.41, which is interesting that this 382 level of 1920.41 is the exact high price that we had in 2011, which was 1920.40, and we're 1 cent off. So find that very interesting. So the fib level above that would be the 1979.49. And again, the level before that we're trying to get above. That way we can push ourselves up above this 2.236 level. Again, this is 1953, 1954 area. All right. So that's what I got for gold for you this week. Hope you enjoyed the video. Hope you are understanding what I'm talking about. Hopefully I'm not just some person rambling all the time that you don't understand. If you do need some clarification on anything, feel free to message me on TradingView. You can shoot me, hit me a message on Twitter. Now that I'm on Twitter, you can hit me up on Telegram. I'm on Telegram. But if you like, go ahead and hit that subscribe button. It mean a lot to me. Go and hit notifications. Like the video, share the video with people that you know. I know I talk a lot. It's almost 40 minutes here, so I'll shut up. I'll try to make these videos shorter. I know I just start ranting, but I try to give as much information for you guys to understand and digest as possible. And I make a lot of these in a day, so it takes an entire day to get through a lot of these. So thank you very much for your patience and bearing with me. I do appreciate it, and happy trading, everybody. And Tomorrow is Labor Day. Don't expect too much trading happening, but expect a little bit. But just not in the U.S. market, though. I wouldn't expect too much in the U.S. market, but expect something happening with crypto, that's for sure. So take a look at my other videos if you like, and hopefully I'll see you around. Thanks, guys, for watching, and have a good Labor Day.